Good evening. Welcome to our live Facebook. And it is the Wednesday night that we've been used to doing, and I think it's good to see all of you. So let's get started, right, shall we? And we don't want to delay, and of course this video will be recorded and can use it for future references when we are talking about this subject, which is algo trading. That's right. Now, algo trading in the world of, especially in the area of Pentagon Guider, ever since we've been given a license to operate our Pentagon Guider, it is a blessing. And many of you who already been used to our volume spread analysis, the Pentagon Guider, it is something that is vetted by the so-called the regulatory, and it is functional and fit for general usage, right? And that's always been something that we are very proud of. And of course, tonight is to share with you some of the development work that we have done and how you can also move forward to really know more. So this is more of an introduction, and also share with you some of our performance results so far, right? And before we go live, all right, when we go live, we mean this services and the product will be available for generally everybody. I mean, of course, we are very proud of Trade VSA, our first Malaysian digital investment license holder, right? And it is a long distance. So tonight sharing, we will talk about the SMARTRobie algo trading, and also dwell a bit of the history of algo trading. There has been, a lot of algo that you heard a lot in the market. I'm sure some of you going back to even before COVID and so forth, but a lot of them are not regulated. They come and go. But more importantly, I think they haven't been really scrutinized, and many of them remain to be a black box. Now, what does a black box mean? A black box, when the algo is a black box, you do not know how they generate the signal, right? And many of you have been through our program, our VSA 360 and our Pentagon on SMARTRobie. You probably know how the signal is generated and how it is a very so-called leading indicator which actually tracks the movement of the smart money. We look for accumulation, which is a stage one. Many of you are quite familiar, so we call the follow the smart money. But the hurdle or the obstacle that many people is to learn those signals. Learn how to read the chart, learn how to use it. So with the advancement of the technology that we have, the AI, even today, if you look at the Gemini AI Studio, you can actually have a bot, right, helps you to read what you see in the chart. If it's an Excel file, it can guide you through and things like that. And very similar, we want to make a SMARTRobie to be a self-guiding, right, autonomous decision making to help you in your buy signal, buy and sell, and that's what it means. So we're going to look at some of the past success and failure of algo trading and why SMARTRobie USP is quite different, and also look at the result. I think that's more important, the result. Of course, there is a lot of people advertising their algo board and saying how supreme there is, like making 20% a month, so and so forth. To me, that's a bit overstating, right? And not stating the truth of it. If it's so profitable, 20% per month, I think the owner of the algo should adopt it and use to make money. Now, for us, we are quite reasonable, somewhere between the 8 to 12% return per year. That's the target we're doing with our algo board, and in such a way, it can help you to stabilize the whole real of trading in here, and also clients and users can also learn along the way. You can do it yourself. You save some money in terms of a management fee, but if you can have someone else to do it, just like either you take the Grab or you do it yourself, you drive the car, right? That's the analyst about it. So let's look at our first slide that we have from last week. As I said before, the year of snake. Was it a good year for stock market? It's going to be a very, very choppy year. All right, make sure those of you who came last Wednesday, you know what I've talked about in here. We already have Donald Trump inaugurated on Monday. That's right, it was a public holiday. You can see the market recover back, and straight off the bat, right, he has put in a lot of tariff in here, and that has caused, I think, the Hang Seng today a bit of disruption in here. So that is probably be the overall theme that we'll be seeing, that a lot of market volatility, a lot of uncertainty in here. And of course, if the market were to go lower, there's this thing what I call the Trump put, which means he's going to come in and make a couple of statements that will, savage from where the losses of the market is, which means the market would not go down too much, because many of the major techs, like those who came for his inauguration, include people like Elon Musk, owner of Tesla, Jeff Bezos of Amazon, Mark Zuckerberg of Meta, of Facebook. So those are the shares. Only Tim Cook, I didn't see Tim Cook in there, right? So these are the big tech which will have some sort of basis, because you're going to give a private call and ask them to do something, right? So the market has changed. From an economy standpoint, for the US may not be a good thing, but from a stock market, definitely it's a good thing, because after all these people, including Donald Trump, they're all businessmen anyway, right? Okay, so that's the kind of scenario I want to give on to the imp. So let's talk about algo trading. What is algo trading? Basically, algo trading is automating stock trade execution, right, using computer programs. Basically, that's it. So which means in the past, if you do any value investing or any trading, you can use a moving average, like a 20-day moving average, cross over a 40-day moving average, and then you do an entry. All right, and if the 40 days cross below the 20-day thing, that's an exit. That's a very simple algo bot trading, which means all decision is made from the bot. Okay, so the question is, how good is the bot? Now, the goodness of the bot actually depends a lot on the fellow back testing. So this is also why we are quite different in it, is that because we take pride in it. After all, we already say, if the client don't make money, we will fail to exist. That's right. We will fail to exist. Trade, we say we have to make money, but even when we make money, is we are not talking about like 20% a month. We're talking about generally in par with the market performance. But one good advantage is that the computer will be making a lot of the decision making rather than human, because human, we need to rest, we need to sleep, we need to eat, we need to drink, right? We cannot be always analyzing the market. So this is where the automation comes in, the automation of the code. So we are working with the technology partner, which is from Bursa, to able to have the bot doing the buy and the sell execution. And of course, this will always be checked and quality control by a human. At the end of the day, you still need human, just like all the generative AI that you see behind the open AI, you still have one human training the bot to say that this is a cat, this is a dog, this is a Darth Vader. And in much very simple, we want to have QC behind our every single trade that we said, look, if the Pentagon guy is doing this trade, why is it doing this trade? So we have to retrain and readjust back into the market. So that way it becomes more efficient going forward, very efficient in market, no human in motion, right? There's no second guessing in here, and also the speed, how the green Pentagon is compute during the real time that we have, and then we can also compute at the same time by looking at the price and volume. That will definitely impact in the market structure that we see, right? Because when there is a price movement, there's a volume in here, we want to see whether there is a continuation going forward. So algo trading is pretty much on that one. But many of you would have known that the Pentagon guided algo is basically a momentum strategy. It's a momentum trend following. I repeat, it's a momentum trend following. So with the green Pentagon coming in, the entry, if you look at it, we always talk about is immediately on the green Pentagon, if you spot it, or the next day opening, that will be the thing. Of course, you also set up a stop loss, a target profit, right, and also an expiration date. That's pretty much the whole trading plan, and you just need to do it consistently. Later on, when I share with you some of the backtest results, that's pretty much how the algo trading, everything is done by the computer program. So you look back in the history of the stock exchange, you have this, right, where you have people buying. This is just merely on buying and selling, right? A lot of the market operator, they really don't, they make money by marking up the price. They know that if you buy at a certain price, they will know, they will delay your order, right? They will delay your order, and then they will buy from the market ahead of you and then sell you back for a small spread. And those spreads could be something like 0.3 or 0.4%, right? So this is how the human in the trading peak able to out buy you. Yeah, they will buy from the market, then sell back to you. right? That's how, just like pretty much what you've seen in the Forex, right, where they say there's no commission, but there is a spread, a 3-point spread or a 3 basis point spread, and that's usually how they make the market from then onwards. So when you buy, you end up always buying ahead. Right. So in the early computerizing day in the 70s and 90s, before we had the market open peak, so the NYSE designated for electronic order routing, right? Today is, in the Bursa sense, it's called the OMS, the order management system. So they basically route to the Bursa, and then they get a match behind in the back. So the faster you're able to route your order to the Bursa gateway and get a match, okay, from another platform, right, or broker, the better you are. So this is where eventually the rise of the high frequency trading. All right, then there's also a case of index arbitrage trading. All right, I'm not going to go into that, which is not part of the scope. But in the 1990s, as computer come in, I think you heard of Interactive Broker. They were one of the first pioneer who got into it, and there was a shift to using computing. The human that you see up in the picture, just like today's trader who, they read the chart and then they do a buy and do a sell, or they read the annual report, or they read the analyst report, they do buy and sell. That will eventually be so-called replaced by computer programs, and that's what you see even in this. So Trade VSA take the so-called pioneer status to really move into this area to introduce ALGO trading. But of course, our ALGO is not a black box. You already know how it's done. What we basically do is just automate it. Whenever you see a green Pentagon, right, you have to decide, do I feel like trading or not? Then I have to check whether I got money or not, and then I feel that, hey, I got time to trade or not. Then I have to watch the trade, all those things that humans do, right? But also, by the time you decide and then you wait for confirmation, meaning you want to check, you call your broker or you call your analyst friend, hey, what do you think of stock ABC? Or right now, is it a good time to buy data center like Gamuda? You see my point, right? So those things are already advent back already. Whatever happened in the past is the past, right? But do take note, smart money, especially the operator, they have some of the best knowledge and also the best information out there. They will be best to know, and they use computing power to stay ahead with them. All right, they can sort of massage the message that comes out on the media. They can massage the message that comes out on all the bulletin board. So to us, using volume spread analysis, using Pentagon Guider, we detect all this kind of movement already priced in. So when we try to trade, all right, using the algo, we don't listen to the news. By the time the news comes out, it's already too late. And that's where the institutional trader develop a lot of this in-house algorithm, which is price and volume. So very similarly, Trade VSA, we also do the thing. It's just that we do it more on a local basis. All right. So is this okay so far? If it's okay so far, give me a thumbs up, because the stock exchange has pretty much, and of course, common question you will ask, do we have algo trading in Malaysia? Now the question is, algo trading by human, yes, but algo trading that do by robot automated routing, not. So we'll be one of the first to actually do this, where the route from the SMARTRobie right to the back office. And go straight to the Bursa gateway. That's what we're trying to do. So the order will be much faster. You don't go through the human side. The human will just do merely the checking, and that's a whole main goal what we are trading here. Now back to the question just now about whether they are algo trading. Previously, all algo trading will be generated by a computer program. So they get that signal. That person still needs to go in and hit a button. Still need to hit a button and to route the order in. So there's still one human touch, either a button or series of checking or filtering that is done for that one. Okay. So algo is not without its failure. I think many of you would know. So lately in the year 2000, you heard many of these what we will call high frequency trading. Now high frequency trading, it's very low latency, which means there's almost milliseconds where they sell the data. For example, if Bursa can send you a delay data of a buy and a sell, just delay by, let's say, 2 seconds, and then another vendor, the delay is 20 milliseconds. All right, so that millisecond, which means you can jump ahead of him, buy before him, and then sell it back to him, and then you do what we call arbitrage, right? You buy and sell, and then you make that small. So there's a lot of transaction, and generally Bursa like this kind of high frequency trading because it generates a lot of volume. It's good for the market. It generates a lot of turnover, which is also good for business. And many of the high frequency trading moving closer and closer to the exchange. For example, if you have a OMS order, a backend that route the order in here, you want to be as fast as possible. So you want to do co-location. Probably put it in Bursa, next to Bursa terminal. So which means the Bursa gateway will do the automatic electronic matching, right, between your selling and the buying with another buyer. You put it next to there. That's co-location, much faster ahead of it. So that gave a lot of volume in market in here. So that has what we call the high frequency trading. Then 2010 has one of the big so-called dark days. The dark days was the flash clash. Right, because a lot of these bots were like trading, they're following a certain algorithm. So there's a series of trigger. So one bot will sell, another bot will sell, another algo will sell. Right, so that trigger and Dow Jones fall right straight up, very fast, and then recovered. Because it went so fast that even they did not trigger what we call the circuit breaker, because it's so fast. Because as soon as it dropped more than 1,000, it will sell in that millisecond. But at the same time, there are certain algo bot will say, if you drop more than certain thousand or certain hundred, I will buy back. You see that? So there's always two opposing algo in here, and then immediately you got a lot of people who put their stop loss all got washed out. Yep, that was what was the flash clash in it. So there's always systematic risk, and this happened within a couple of seconds, right? And or within that period, or maybe 10-15 minutes, you can see market crash and then go back up. It's a very scary one actually. Like your wealth just evaporated, millions and trillions of it, and then finally you get it back, right? So this is why when we design our algo, we try to avoid all this high frequency trading and generally go for a slightly longer period. And I think that for many of our members who have this, remember we talk about the Pony Express, the methodology which is actually done by human. We did a lot that last year. That was from the March to June in 2024. We did a lot of back testing, human, like you buy here, you keep it for 15, 16, 17, 18 days, you take a profit, a certain thing, right? We've shown that to be very successful. But the unsuccessful part is when the market start to drop, we as humans find it very difficult to cut loss. And that's the issue in here. So when you have the algo which already predetermine your exit area, so when you buy a stock, you have basically a bracket order. One for your target profit and one for your stop loss. Okay, so that's usually the part where we're saying in here. Okay. So why algo trading today? Now, algo trading has taken another meaning with the advent of chatbot, and many of you like ChatGPT in here. So there's a lot of questions people ask, can the ChatGPT analyze the stock for me and trade for me? That's always been that question, right? So again, you will notice if you ask this question on the chatbot, they will generally say that no. But if you go and trick it to us, then they will probably say, so that question like you ask, what is the 10 best tech stock to buy, or can I buy Tesla now? They'll give you 5 reasons to buy Tesla. At the same time, there's 5 not so good reasons. You as a human will still need to decide. They cannot do that. So they do not validate, and also they are not regulated by the Securities Commission to give buy call and sell call like what TradeUSA we got our license for. So with the generative AI, there is a lot of follow-up in here. So one of the things we try to do in TradeUSA is to make the algorithm a bit more predictive. Now, for those who don't know, Pentagon Guider is approved IP patent, and the name that you will see actually later, I'll just show you, will be a stock market predictive indicator. It only predicts probably the prediction, it is right. We're talking somewhere between 45 to 65% depending on the trend of the market. There's no such thing you can go up to over 90% in here. So be careful when you see a lot of people say that, you can make 20% a month, right? You better run away very, very quickly. But the other thing is that previously in the past, a lot of the algorithmic trading which was available on the institutional side. Then the forex came in, the crypto came in, right? Then retailers start getting that, right? They were all trading based on the robot that you can hire through the MetaTrader platform, and even TradingView. TradingView also have some of those bots that you can rent out, right? And then you connect it to your own account, which means the robot will trade for you all losses in there. But the thing with that is not a full service, all right, which means you still need to manage it a bit. They're just renting it, and of course it's pretty pricey too. What we do in Trade VSA, our motto is we won't sell anything or market anything if we feel that we cannot make money out from it. So that's why our system in here is rigorously tested, forward tested, and going forward. And we do hope that with the incoming the kind of bullish month that we see in the US market, and perhaps there will be some movement. I think right now we may see a bit of movement on the oil and gas, right? Those trade that is already on the red Pentagon, those something you want to avoid. And also quad platform and automated robo-advisory, which also turn the attention to only on digital investment management for the ETF. All right, so a lot of this quad are basically quantitative. So why our SMARTRobie algo is unique, all right? As I said before, we have the proprietary smart money insight. We locally patent the algorithm, and it's a proof patent, and that should last us to at least 2040 for the next 20 years. Okay, so I think many of you know the Pentagon guider, which is the algo that's powering. We analyze price and volume, right, to detect institutional trading activity. So when we generate that algo, we use real-time data for when we actually route the order. When in future, that's what we're doing. But right now, the SMARTRobie they are using, it is a 20-minute delay. So keep in mind, just like what we say in our FAQ for the SMARTRobie in here. So a lot of the time, SMARTRobie with Pentagon Guider, we try to anticipate major market movement. So you have seen a lot, right? When the market start to fall, so I always tell my member, wait for the green Pentagon, and when you see red Pentagon, likely the market's going to go up. This is nothing new. Many of you who are listeners, they already know about this, okay? So the next thing is, how do you bring it to the next level? And then it has a adaptive volume price integration where you see sign of strength, sign of weakness. That's where the algo will take into the weightage of if there's an uptrust, the likelihood it will exit if a certain condition is not met. So we actually program that into the algo when we do our bot trading in here. So you adjust it based on the real-time volume and price, all right? So when you see a red Pentagon, you want to be exciting. So that way, we provide the precise entry and exit. So the entry for our green Pentagon is usually at the green Pentagon at the closing price. That's how we done all back testing in here. So that way, we can lead a lot of false signal because we are very close to the end of the market. So usually, if there is a follow through, right, then the next day the market will start to move up. And that's what we are trying to do basically, right? Be ahead of the market. And one thing we have done enough backtests that we find that there is a lot of analyst recommendation or also influencer, a blogger or influencer that is on finance asks you to buy this, right? And generally you will see those stocks has already moved up a bit. So when you follow those stocks, it's very hard and very difficult to make money. And you always see, right, by the time the influencer or the influencer make that comment, buy these stocks, right, you will see Pentagon Guider already move up. That's why the Securities Commission is doing a lot of this market surveillance, is to reduce a lot of this influencer recommendation, which is not based on anything or based on their opinion or based on their fund management, so-called, based on their value investing technique, right? But beware, always beware, look at the chart, always look at the intention, and also look at the track record. What is their track record so far, right? They can say they are millionaires, so and so forth, but always question, what is your back tested, what is your win rate, what is your losses in here, and how have you performed so far, right? Because remember, everybody is different, and what we try to do in Trade VSA in here is to present our back-tested program with our characteristic of our algo trading board, so you are adaptive to it. That's one way to make money in the market, and this is definitely the shorter term. We believe we can make money, and at the end of the day, people say as long as you make money within the risk parameter, I'm okay. And that's what we're trying to do. So that's why we focus on the swing pattern. So you notice from this green Pentagon, the market actually swing up. That's basically, in short, in the technical analysis, we look for that swing pattern within 5 to 20 days, and that's the kind of holding period it is. So generally after the 20 days, if the market doesn't move or it expired, we will take profit. We're not going to run it until, forever. And that's the whole basis of it. If you look and been following me for some time, you probably also understand the stock market generally don't move trend up for the all 12 months. There were certain months they were going to be pulled back, certain months they pull up. At the end of the day is what is your return? We all know the KLCI last year return. If you buy and hold, yes, then you'll get that maybe 13%. But if you look back, the last big movement was after Christmas, just 3 days before the 31st December. Why was it? Because it was window dressing, right? And then a lot of the big movement was from March to June, right? Because of the data center. And then since then, the market has sort of moved sideways. And there was another uptick. Then the data center report came out from JP Morgan saying that, look, Malaysia fall into tier 2. We may not get all the AI chip, and all of a sudden the market collapse. So those kind of things sometimes, right? Information come, information go, right? We find that over years, it's better to read the market and understand the smart money insights. If you all agree, give me a thumbs up. And that's pretty much what the SMARTRobie ALGO is all about, right? So it's not really a black box. So today, number one concern, why we do this, okay? First of all, the market moved very fast. As I said before, the example we said about all the news, people try to digest the news and trying to outguess the news. Especially Gen Z and new millennium, right? They don't like to read a lot, right? Unless they have a lot of time, they'll sit and read. But generally, they want fast data driven for entry and exit. And that's what we are advocating. So our system is only suitable for those who don't want to read the chart, don't want to do a lot of work, okay? And they want a precise entry and a precise exit. So if you're the type who like to read everything about the stock and also look at the influencer is saying, the analyst is saying, this system is not suitable for you, okay? This is not suitable for you, right? And for those want to learn a bit more, we have certain tutorials for SMARTRobie there. You can reduce your learning curve. So that way it's not a fully black box in the sense that, we declare all our trades, including all our limitation in here. Now, further down, also institutional smart money often drive a lot of the price changes. So you can see, right? So before any news that is out, right, stock market will move up. And then finally they say that, oh, we are doing some corporate exercise or we have some projects, whatever the case is, right? That's always the case is. And also there are some stocks after they have gone listing, then the market start to drop down, right? Right? Why do we see that, right? It's because sometimes smart money campaign happens. Smart money campaign happened. There was a campaign to push the stock price up based on certain recommendation, based on certain thing. But if you look at the chart wise, right? Charts don't tell lies, human do, okay? So that's one of the things that we are trying to do in here. So when you see red Pentagon or you hit a certain price target in here, the algo will decide it's time to exit. Okay, so this is where we try to address the number one concern, just what we have. We have the insight of the smart money, we have the algo. So the Pentagon guide that was built is to trace the smart money movement by focusing on the footprint of the price and the volume pattern. It simply means that generally before any big market movement, there will always be accumulation, right? Smart money are trying to buy at a very low price, and on good news, they will try to sell out. Right now, this kind of thing is very hard to teach Gen Z or new beginner, and of course they like to know everything about it. By the time you know everything about it, they will take years. The market already moved up. So what we try to do in SMARTRobie with Pentagon Guider is to pinpoint this entry, get in by the time they declare we want to be out, and then make a reasonable profit, and then move on to the next stocks. That is what it's all about. And those of you who are familiar with the term, Pony Express came because that you ride the horse for certain momentum for a certain period. By the time the horse get tired or the pony get tired, you disembark, you mount on to another horse. And that's precisely what we are trying to do to gain that extra alpha entry. So our unique proposition is Green Pentagon. When you say Green Pentagon, right, it looks into the price and volume relationship in here, which I've been going through accumulation stage, and then finally the Green Pentagon comes out. That's where the entry is. So if you look from here, there are two entries, right? One at the beginning of the Green Pentagon, one is almost at the end. Of course, without the hindsight on the Red Pentagon. So this always tell you, right, if you come from a low base, entry 1, your risk is lower, right? Your risk is low. Your reward is high because the stock can go up. But if you are buying at entry 2 here, no doubt this is where a lot of the new beginner makes the mistake, because they have evidence that the market is going higher, a lot of smart money, but the stock has gone up a lot, right? More likely is your risk is higher. It can go up, yes, it can, but because you already taking up so much risk, you want more reward. So when the market turn against you, you generally don't want to exit, and that's the human emotion. So this is where we train our algo bot based on Pentagon Guide, is to go in at entry 1, okay, not entry 2. Entry 2 is highly risky. Entry 1 will be better. And of course, not all trade works, but if you can win 50% of the time with a good reward to risk, you generally will make money. And that's what's making money is all about. All right. So for those of you who are familiar with this, give me a thumbs up and share your name, and so I know that I'm also speaking to some of our member who is listening about our trading bots. Right. So we built the green Pentagon and the red Pentagon. So generally when you see the red Pentagon, you'll be out. But our trading bots are very fast reaction. So generally if we have a certain TP we already hit, we will get out. We won't even wait for the red Pentagon to come out in here. So how we extend the time testing to today, all right, which means before we came out with our green Pentagon, we actually back tested even during the COVID. And of course, you all have seen during the COVID years, there was good year and there was bad year. So we've done a lot of our back testing, snapshotted it, and then from then onwards, we refine it for today's market. So from 2019, 2020, 21, 2022, we've seen a bull bear market and a sideways market, right? Of course, 2024, would you call it a bull market or would you call it a sideways market? It depends. Okay, if you are buying the so-called mid cap and FBM, then it will be a bull market. Okay, because it is up 13%. But if you buy the small and mid cap, it gone up and come back down. It is not. All right, it's very, very personalized. Okay, so it's a bit of stock picking, right? And of course, when people pick the right stock, they will say a lot. You know, it gone up by 200%. And then it gone down by thing. But remember, trading is about buying a certain stock, holding it, and over percentage, right? So you cannot take a snapshot of just all the good trades. You got to have the bad trade too. And this is where a lot of new beginners fail to learn. And that's why one of the things where we do in our education is that you got to love your good trade as much as you love your bad trade, right? Except the bad trade, make sure losses are small. Your good trade losses are big. And when you even them up together, you will end up making money. That's a secret to it. And of course, this is something that I've shared over time and time again. It's not that difficult, but the obstacle that many people have is their own emotion. All right. So this is something where we hope that generally people can overcome it. So with that, you can see the yearly profitability around 25% in here, which was very good. And of course, if it's a good year, you probably get a bit more. Of course, let's get down to the limitation. Okay. Now the limitation is definitely is, as I said before, Pentagon Guide is a trend following, a momentum trend following. So if there is no trend, then there is likelihood a lot more unsuccessful trade. So let's hope that the sideways market would not kill your profitability. And also there's this thing what we call trendlessness. So when there's trendless, there's a lot of increased noise. Sometimes you get green Pentagon on the white spread bar, right? Then it will come back down again. We've seen a lot like VLB, Westland. Then we also see MMAG. A lot of the penny stock exhibit this kind of noise, right? And also there are certain stocks that don't have insufficient volume, where you see a lot of zero volume, tick, 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 right? Then suddenly volume comes out. Those stocks don't do well. So the algo board are really designed to avoid as much of this as possible. Then you also have stock chart that is less than 6 months of trading period. You also provide insufficient. So some people tell us after it's gone IPO like 3 or 4 days can buy. I said you don't know, because we need to see the traces or inside of the smart money in here. So these are the limitation of the algo. So I say that after it's gone more than at least 6 months, you see green Pentagon and also SMARTRobie employed sentimental analysis, reading the news headline, and generally is if the news headline is bad, it's a good time to buy, and generally the news headline is good, it's time to sell. All right. So those are the tacit of a contrarian trader, right? Like what Warren Buffett say, when there is blood in the street, you want to be out. No, when there's blood in the street, you want to be in. When there is greed in the market, you want to be out. Okay, hopefully I got that right. So coming to year 2024 result, I want to share with you with some real market condition. We tested it over bull, bear and side market. So for year 2024, which was the year of the dragon, right? Again, I asked some of our members how was their return, and sadly, I have to say I'm not a good teacher, right? They've been around with me for some time, and yet last year they also lost money, right? But at the same time, in the virtual trade, they proved themselves to be very good trader, right? So why the discrepancy? I think one reason I see a lot, including myself, is the emotion. Now, remember last year in August, during 5th of August, 4th of August, right? The market went through a sell-off, right? Because inflation was going up, and the same thing also hit Malaysia. I think Capital A fell, all the big stock fell but immediately the market reversed up. So generally, most humans cannot reverse fast enough. After market fall, you're still waiting for the news, right? And then the market suddenly turned back upwards. So this is where the emotion is. But if you train SMARTRobie, when he has the ALGO, the Pentagon guider, which detect volume come back in, and there's a green Pentagon, he will go back in. Yeah, that's just generally how the market would move within this kind of a thing. So with that, the market able to shift into the kind of what we call price volume dynamics, right? Adjusting to the market inside, right? That will give you the confidence. Now you can visit this information, go over to SMARTRobie in here, and you can find out the performance of in here. So I'll talk about the first trading board. There are more, but this gives you an insight to it. The P75 is just a name that we use. It's a short-term trading board that assists people to time their buying, depending on the guy, below 50 cent to 2 ringgit range, right? 2 ringgit range, that's the range. So it buys after the green Pentagon signal, ensuring market entry, holds it for 3 to 4 weeks. So there is an expiration date, very important. So if this actually comes from the Pony Express trading method, which many of you are already familiar, our members in here. If you're not, so we took a lot of our success from there and then put it into SMARTRobie, and that's where we are. It target a 6 to 8% profit target. So it doesn't go for like, my goodness, like 50%, 30%. Yeah, once a while you will get it, but we're talking about the law of average number, right? So you need to win, right? If you only win once with 30%, then the rest lose, right? You're not going to make your money. Okay, so trade conflict with the SMARTRobie Pentagon guider in here. All right, I will show you more of the performances in here. So next thing, when we design our board, is also low drawdown and the risk management, right? So you don't want to be investing in something or investing or getting a bot to manage your money where you have very quick drawdown, right? A lot of humans like the big excitement, like you go to Genting and suddenly you win 10,000 ringgit, right? But what happens if you lose 20,000 ringgit? Not good, right? Everybody like to win 500 ringgit, or let's say you win 50 ringgit, win 50 ringgit, win 100 ringgit, 50 ringgit, but you don't win big. You win small. Once a while you lose 100 ringgit. And that's basically what we are trying to do here. The risk control framework will limit a lot of the downside because we have stop loss, right? That's why we also have the expiration date, right? And then we also adjust the stop loss. Sometimes the market break before even our stop loss, we will out. We don't use the ATR stop loss, and we use a relatively good position sizing, right? Then we try to preserve the capital, right? So if the system go through a 30% drawdown, for example, the market will shut down by itself. Okay, market will shut down by itself, and that's where the risk manager will come in. Okay. Let me make a note of this one here. So what we are trying to do is to ensure a smooth equity curve, right? Compared to a traditional discretion trading where you can go up and down. So this is from our back testing in here. We started somewhere in April last year. That's where we first came out with the board. So it's by this March, we already have it 1 year trading live on here. So what we are trying to do now, you make this a commercial product where you can put real money and trade together with the commercial. So we have seen the full adaptive system from here onwards. So from here you can see the market started with 50,000. It goes up to as high as 57,000 right now, but there's a drawdown back to about 52 plus. So that is what we call a 6% drawdown here. Okay. So 6% drawdown is something what we are trying to aim for, all right? Because a drawdown which means from the high to the low. So reason is because simple. If you made 50,000, you got to 55,000. Hey, I made 10%, right? But from 55,000, you don't want it to go down to 48,000 because we know when you're going down to 48,000, most people will just close their account. So what we're trying to do is also to educate our client. The equity curve is important. A lot of people only want to see the big win, big win. But what this does is that over time, it will grow your money. And that's how wealth is built. I've done this many years before, but now we are doing it in using the trading bots. Okay. So this is also the monthly return. So you can see how it generates in here. So if you see from here, right, we know during the month of July, a lot of trades were initiated in July, but the August month, right, August 5th, the month was sell off. So that's why a lot of trade that were initiated in July went through a minus 3% down there. Okay, and then June was a good month. We started in June. Then we have September, October, pretty bad month, and that's where people usually will cash out. They say, hey, September also lose money, October also lose money, all right? But then November was a making month. Then December is a losing month. Then right now January we are coming back. So it's like this. So a lot of people. So if you are a human trader, you trade like that, right? It's very tough for the emotion. So end up you become a poker face. So what we're trying to do is to delegate this. You know, you already sort of push the money making thing in here and be ready with it. So you don't really have to, you stay from it a distance. You have a sort of mindset how this thing works, and then you should be fine. Okay. So in our smart algo board, we have three successful board, the momentum one and also the FBM KLCI one, which has slightly lower risk profile in here. Momentum and P75 are really two really moving stocks. Okay. So tonight, due to the time frame I just want to talk about P75. So coming to my final part of it, year 2025 is going to be a year of trading, where if you buy and hold and try to think the stock is going to swing back up, forget it. It's going to be going up, hit the resistance, take your profit, the market's going to come back down. And pretty much that is what we are trying to do here. And if you can do it consistently, I think 2025 will be good. So check out the SMARTRobie. In here, the US one is doing very well, right? So right now, you can see the KLCI now is trying to move back up into a stage 2. No green Pentagon yet. So if there is some stocks is ready to have green Pentagon, the market will start to move up. Okay. Now remember, the ALGO Pentagon guided is already there. All right. So this is a new era for our company Trade VSA. Previously, we focus a lot on education, right? But as a teacher, I find sometimes my students don't do well. As a teacher, I fail too. Right, because I fail to teach them the impact, the right thing. So what we're trying to do is to help our student out, and for those of you who like an assistant of a SMARTRobie train who can trade based on our training them in here, this product will be out very soon. We hope to market this through the brokerage house where you can open an account and then channel your accounts under you. Now all this are done legally because we are regulated by the authorities. So it is a way to help have your trading automated by a bot. So join our Telegram chat room for more information. So that's all we have for tonight. If you have any question, feel free to pencil those in. I hope that my little bit of sharing here will open the sites that you are more receptive to the algo trading, not just from us, but all out there. At least you know the right question to ask. Thank you and good night.